Okay, so episode 1 real quick. Liquidating your cash into Coinbase. So it's like this. You go to work, you get your job, you go to work, you get your check, direct deposit goes in the bank. The bank's gonna take that money and use it for the fractional reserve system. You know, the bank made their own book called Modern Money Mechanics, and it explains the fractional reserve system on which the bank system operates. And they're going to use that fractional reserve system to make a lot more money, literally, and then to loan out the money and then get interest on the loans, and then to also make investments on different type of investments. And they're going to make a lot of money off your money, and they're going to give you pennies on a dollar a year, and that's cool if that's what you want from life. But the new age right now, what a lot of people are out there utilizing right now is something as simple. You take your cash, you liquidate it into a Coinbase. You sign up for a Coinbase account. Sign up for Coinbase, link your bank account to the Coinbase. You get paid, you get a check. You take half of the check and you liquidate half of the check into the Coinbase. You take any of your disposable income if you couldn't do it with more. If but we're talking liquidating your check. So it doesn't matter if the income's disposable, because you're just going to liquidate your money into the Coinbase account. And if you ever need to take the money out, you can take it out. But the thing about the Coinbase account that makes it different from a bank account, it is similar to a bank account in that it holds your money. Now, it's dissimilar to a bank account. It's unique in its own right because it's actually going to you're liquidating your cash into another form of currency, which is Ethereum. So it's more like an Ethereum bank account or a Bitcoin bank account. So it's going to go up, it's going to go down, and most likely it's going to go up. And then you're going to be receiving interest on your money, like in days and weeks, on a regular, constant basis. Something way unlike the bank system. Like, it's going to totally turn the bank system around. It's actually scaring the mess out of the bank system. It's exciting the bank system because they can invest in it themselves. But eventually it's going to scare the bank systems because if people catch on, there's certain things you can do with it. And that's what I want to explain right now. Just real quick on a more simple level, not even talking about buying other coins or nothing. Take your check, half the check, whatever, you liquidate some cash, liquidate your cash into a Coinbase account. Now you could choose whether to buy Litecoin, Ethereum, or Bitcoin. You do not have to buy a full coin. You can buy whatever your investment amount is. If you have $100 to put in, liquidate $100 into your Coinbase account. Then you use that $100 cash to buy $100 worth of Bitcoin or $100 worth of Ethereum, and then you just you liquidate it, and whenever you want, you can pull it out. And most likely, if you wait long enough, when you pull it out, it will have a little bit more. Now, what you do is you just start doing that. You liquidate your cash into your Coinbase. Do that enough. Do that a few weeks, a few checks. Then you'll have enough to use some of that Ethereum to buy smaller coins called alternative coins. And there are different exchanges that you're going to use to purchase those coins. Now, depending on what coins you want, that will determine what exchange you have to get on that has those currencies. Now, when you're trying to buy the smaller coins, it's really like this. When I first bought Bitcoin, I knew it was going to be big like Forex. I knew it was going to turn into the next Forex. I saw Bitcoin. I was like, okay, this is the first one. This is going to work because of all this information. This is going to work. And when it pops off, there are going to be a whole bunch of other ones. And when the other ones pop up, now the only way you're going to be able to get any of them, because once they all reach a certain point where they're too expensive, the only way you're going to be able to get any of these type of cryptos in the future is if you already have some type of form of investment already set up, whether it was real estate or it was stocks, it was bonds, it was Forex. You're going to have like some type of reserve of $10,000 and thousands of dollars and stuff to like really like get in on it in the future, like, on a high level like you could right now for a lower profit margin, a higher profit margin, lower price, sorry. And when that happens, you're just going to be able to, the only way you're going to be able to get one crypto is to have another type of crypto, and you're going to have to be trading cryptos for cryptos, the same way they're trading currencies for currencies on the foreign exchange market. So that's what excited me about it, and that's why I got it in the first place. So now that we're doing that, it's like you liquidate your cash into the Coinbase. Liquidate enough cash in there to where you could take half of the cash that's liquidated into the Coinbase, into Ethereum, and take half of the Ethereum and put that into different exchanges to where you could buy the smaller coins. And you would leave the other half in there liquidated like a bank account, and it's going to be added interest just based on the Ethereum itself. And then you could use the other half to buy the lower coins. Now, here are the lower coins I'm talking about and the exchanges. There's two different exchanges. Hint BTC. That's the first exchange. So you sign up for Coinbase to liquidate your cash into the Coinbase and buy Ethereum. Then you sign up for a GDAX, GDAX. Sign up for a GDAX, and you're going to transfer your Ethereum from Coinbase into the GDAX as Ethereum. Make sure you transfer the Ethereum from Coinbase to GDAX as Ethereum. Make sure you transfer the GDAX as Ethereum to the different exchanges. Now here are the 2 exchanges that I'm about to sign up with, or I already have people signed up with, or whatever. I already have accounts open in them, ready for me to drop my money in and execute these trades. Hit BTC. Hit BTC is important for 2 reasons, because you can buy Dogecoin off of it, and that's supposed to be the first exchange that's offering the AML Bitcoin. The AML Bitcoin, it might not be like officially related to Bitcoin, but it has the name, and the AML stands for anti-money laundering. And that's going to be really good for people who are very cautious about the crypto industry and it being hacked and stolen and stuff like that. So and the FBI owns the most Bitcoins out of anybody in the world, because they confiscated them from drug dealers and stuff. So that's a real concern for them out there now. So an anti-money laundering alternative coin or whatnot, or crypto, and it's compliant with like 4 different U.S. laws at least, including the U.S. Patriot Act. You know, the war on terror is compliant with that, and it's about to get crazy. So AML Bitcoin is supposed to be, because it was a private sale that just entered on Valentine's Day. I've been watching it since the beginning of the year. I found out about it, researching on Google, stumbled across an ad about it or something, an article about it, and started researching a lot of stuff after that. So the AML Bitcoin is on Hit BTC, and the Dogecoin is on Hit BTC. Now, Dogecoin was personally recommended to me by a friend I have, a childhood friend named Kadero, who's a millionaire for Bitcoin. And he's a millionaire for Bitcoin, and he specifically recommended BitShares, Dogecoin, and Ripple, but I had already known about Ripple. But he told me about Dogecoin, and he mentioned Stellar, XLM, but all of those that he mentioned, I was watching those from last summer anyway. But he just confirmed it, like, okay, because he's a millionaire off of Bitcoin, and he was like, I'm heavily invested in Doge. He would not tell me how many Doge shares he bought, but he did tell me he was heavily invested in Doge. When a millionaire off of Bitcoin tells you he's heavily invested in Doge, he's recommending Doge, BitShares, or Stellar, XLM, and you've already been watching those, and they've gone up a lot since you watch them. You know, it's a no-brainer for me personally. So that's what I'm doing. I'm recording those thoughts and experiences now here for you, and you can decide if it's a no-brainer or not. So let's see here. What else? Liquidate your cash into Coinbase. Sign up for Coinbase and a GDAX and a Hit BTC. Now the other exchange is called Binance. Binance is important because it has a lot of coins that like I've never heard of before, but they're like still really, really low, and they're out there, and they have market capitalizations. They're already out there, so it's not like you're really like risking anything, because these companies have already started. It's not like you're literally with it from the ground up. Now it's already started, already public. They already got people working in offices all over the world and in certain cities. You know what I'm saying? So it's already official. There's one on there called Tron. Tron was like 3 cents when I started. Right now it's been at a stable 5 cents. When the money was dropped in my Binance account, I was considering buying a whole bunch of Tron, and I could have bought them at the 3 cent level. And if I would have did that, if it would rise 1 more cent right now to 6 cents, my money would have doubled already from the Tron. But I did not buy the Tron, I bought the Ripple. The Ripple was the first one I was talking about or looking at since I've discovered Bitcoin had reached $2,000 in last summer. So the Ripple was 20 to 30 cents at that point. When I moved to New York, it went up to $1 and then $2.75, and now it's back at $1, like $1.10. So I was like, okay, I was so scared I was gonna miss out on Ripple, and I watched it increase almost 30 times from from 20 to 30 cents all the way to $2.75. So almost $3, and that would have been times like, oh my goodness, that was a lot of exponents in there. So I was going crazy up in New York, man, because I wasn't having any cash flow coming in. Working on commission, there was a lot of intricacies to the BS. The BS had a lot of intricacies. It was very intricate BS I had to go through up there, and It is what it is. I learned exactly what I need to learn. Nobody else is paying attention. They didn't give a damn. It's all good. I'm back now. I got a job again. I start work tonight. It's going down. That's a $90 shift right there. I'm gonna take that $90. I'm gonna buy 15,000 Dogecoins. That's the profit margin at this level right now. For every $90 you put in, that's 15,000 shares of Dogecoin. Dogecoin is 0.006. Anybody out there that's good at math, because I'm not, you know 0.006 is not even a penny. So I multiply 0.006 in the calculator times 15,000. It came out to $90. So if I put in $90, I can get 15,000 Dogecoins. Now, take $90, liquidate it into Coinbase. Buy $90 worth of Ethereum, $100 worth of Ethereum. Leave $10 worth of Ethereum in there, whatever. And then take the other $90 in Ethereum and go put that in Binance. Or have to put it in Hit BTC to buy Dogecoin. Put that in Hit BTC or any other exchange that you feel comfortable with for getting the coins you need. Just find the exchanges that have Doge. But I know right now off the top of my head, Hit BTC is the first one. I'll give out more. And you sign up and you put that $90 in a Doge. You get 15,000 Doge shares. Dogecoin goes up to $1 a share. Do the math, people. You bought it at 0.006. What's the risk? You bought 15,000 of them. Spread the risk out, right? Now you got 15,000 shares. Each share goes up to $1. That basically means every time it goes up $1, your profit margin is $100 for every dollar you put in. You're getting $100 out for every $100 you put in. Put in $90 right now, get 15,000 shares. And 15,000 shares go up to $1 a share. It's $15,000 minus 100. $15,000 minus 100. That's your risk. Put in $100 right now. Dogecoin, 15,000 shares. Goes up to $1. And that's where the Madman strategy comes into. We're going to end this video right here, but that's where the Madman strategy comes into play. Right there. That's where the game comes into play. That's when the question pops in your head. Hopefully. How many times can you throw $90 in the Dogecoin? You know what I'm saying? How many sets of 15,000 shares at $90 could you get? You can get a set of Dogecoin, 15,000 shares, $90 right now. Goes up to $1. That's 15,000. So that means it goes up to $1. You can sell the 15,000 shares for $1. Boom, you got 15,000. If that's the only $90 investment you put in a Dogecoin at that level of 0.006, then you sell those 15,000 shares at $1. You made 15,000, but you better take that 15,000 and make $1 million from that. If you can sell all your shares out of Dogecoin, now you off the Doge wave. But let's say you specifically say, I'm gonna take. I go to work tonight, so I specifically say this shift is $90. I'm gonna take this $90 and buy 15,000 Dogecoins. Boom. Now I get another shift. This shift, another $90, another $100. I'm gonna take this and I'm gonna buy another $90 in Dogecoin, right? And then you do that like 5 times, right? You know, then you do it 5 more times. You know what I'm saying? Then you do it like 5 more times. Now you have 10 times, right? You can sell the 15,000 shares 10 times, right? I know what you're saying. No, you're wrong. Because you still got 5 extra shares, right? Like 5 extra levels. No, you're wrong. Like, you get it? Exactly. I calculated that already. Like, you get it? Like, exactly. If you could put $90 into Dogecoin like 10 times, and then 5 more times, you can take 5 of those levels and sell them off. You can sell 15,000 when it reaches $1. That's 15,000. You can sell 15,000 when it reaches $2. That's 30,000. You can sell it when it reaches 3,000. That's 45,000. You can sell it when it reaches, $4. That's